What's going on, everyone? My name is Nicholas Merton here at DataDash, and today is May 30th of 2019. Well, folks, I hope you all are having a fantastic day wherever you are, and in today's video, we're going to go about trying to answer two key questions that have been on the minds of a lot of people. The first one has to do with crypto. How has crypto been able to be one of the best performing asset classes in 2019? And along with that, with the China trade war and a lot of other global tensions continuing to grow, how can we expect that these will affect equity markets? What are some of the key price levels we're keeping an eye on? So we've got lots to discuss in the update, guys. Let's not push it off any longer right after our quick sponsor.
CoinField app is the easiest way to buy and sell a wide range of digital assets in over 100 countries. Download the app, sign up, and get $10 free. Start trading using the top 6 currencies in the world.
So as we take a look across the board, guys, in cryptocurrency markets, most altcoins are in the green right now. In fact, they're not just in the green, they're killing it right now following the trend that Bitcoin has had, with most being in double digit or in some cases triple digit territory like Bitcoin SV. So it's been absolutely exciting to see this, guys, as much as I am eager to, call the altcoin market just yet. And I know a lot of people as well are looking forward to the altcoin video that I'm working on at the moment. Again, it might come out a little bit later in regards to June. In this case, might not be right away. I'm going to try to get it out as soon as possible, but I want to make sure it's quality for you guys and that I get the right picks that are very interesting. I want to say that, it's good to see the substantial drop in Bitcoin dominance. This is what I wanted to see. We broke through, for example, the previous low here. So we're setting, basically in this case, lower lows, which is a good sign that this could actually start to drop. And we've still, even as we've had this retracement here from, I think it was around the 60% range, or somewhere around there. Yeah, 60% down to around 54%. Even though we have seen altcoins start to gain a little bit, we still have about a 20-point gap, if not more, to close down on in regards to Bitcoin dominance at these levels, right? We still have a 20% point range of difference from when we had the peak in altcoins back in January of 2018. You can start to see this is when other coins started to slow down, Bitcoin started to regain dominance, ETH started to deplete as well. And now we're starting to see the tide change here. You're starting to see other coins looking like clear retracements coming through, setting higher levels. You had the big bump up we had in about a 2 to 3 day period in mid-May with XRP and Ethereum. And it looks like they're almost building a flagging pattern, like they want to break out to higher levels. They've sustained most of their gains and they might be moving higher. And we're going to be taking a look at some of the fundamentals as to why this might be happening a little bit later on in the video. But I want to go ahead, guys, and jump over to the chart. Now, I want to let you all know something real quick as well. What you're seeing on the screen right now is a really cool software called RX. This is basically a trading platform that allows you to analyze cryptocurrency markets and build a custom trading layout. I talked to the team as of recent, and they're actually going to be a sponsor of the channel, so I'll be actually using them. And what's really cool is that their software is basically trading in the sense of the API or the UI in this case that you're using, but you not only get everything that you'd expect out of TradingView, but you also get real-time price data in this case. So I'm getting the actual real market rate here when I'm taking a look at the chart, but you also get a lot of the functionality you get with a pro account. So you get to have multiple indicators, things of that sort. So I'm really, really excited to be using the platform, and I really appreciate that they're a sponsor of the channel. I recommend, if you guys are interested in checking them out, seeing what kind of features they have, we got a link down below in the description. If you guys sign up, helps out the channel a little bit, but it's really nice. You can have different custom tables here for the different pairings and everything. We're actually going to be taking a look first at GDAX as we go ahead and take a look at some of the major pairs, because I like to personally, as you all know, look at the Coinbase pairs for some of the more established altcoins when I'm taking a look in USD. So taking a look at Bitcoin first here. Again, not much has really changed over the last few days. I haven't been doing any excessive trading, and the reason I haven't is because you can either place your bets one way, guys. You're either going to try to trade out to the last rally potentially to 10,000 as we've been going in this parabolic nature, or you're playing it safe. You've possibly taken in profits and you're waiting for a retracement. Again, guys, you can take whatever position you want. I'll let you know what I've kind of done right now. I have locked out most of my kind of short-term positions. Some long-term stuff not touching, but for my short-term positions, I'm not adding any more here. I've closed out some of the gains here. It could go up to 10,000. That's fine. But for me, I think it's more important for me personally to wait down towards the lower 6,000 range to add in on my positions. That's where I'm looking for. I'm looking for us to make a retracement back to 6K for support. I know some people disagree. Some people, say, Nick, don't try to trade Bitcoin, things like that. I'm not trading on the majority of my stuff, guys. Most of my holdings and stuff I don't touch. It's more of a long-term game. But for the shorter term positions where I'm trying to accumulate in this case with a smaller position, in that case, I'm going to wait towards the lower 6,000 range. And I'll be sure to let you guys know when I actually do make that addition. Now, when talking about altcoins here, a lot of people have, again, been curious about whether or not we've entered into the altcoin cycle. Now, on the USD chart, things like Ethereum, for example, are looking quite nice. If you look at the daily, again, we've got a flag here, similar to what we got, I think, XRP, for example, kind of had like a cupping flag in a sense where it set a base support level on some previous resistance and then continued higher. But this is what we saw in Bitcoin Cash, a lot of the major market leaders, and they've continued higher in USD. Now, on the sense of beating out Bitcoin, that's another question. And I'm very, very curious if we'll be able to really see that as prices start to retrace. Again, guys, the parabolic price action we're seeing in Bitcoin, look, whether or not it goes to 10,000, it will not last forever. Parabolic run-ups usually tend to end quite quickly, especially when they start going vertical. And along with that, people want to see Bitcoin carry through and stuff if they're going to get confident in altcoins. So I'm not exactly sure just yet with, again, the kind of drop off in volume we've seen on a lot of these altcoins that really led to some of these major moves. I don't know if we're going to see substantial moves higher unless that liquidity exits out of Bitcoin. So as much as I do like the charting pattern here, you are going to get to some ranges where you're going to probably experience some resistance. Anywhere from 300 to 320 here is when you had the last support range here where price was actually holding and then continued to deplete. So I'd like to see if price can get above there around 320 and kind of make $300 support. That would be pretty exciting to me, and I would actually start to speculate a little bit on altcoins. But the USD charts, as much as they look good, there's no signaling signs yet that shows me I want to take that kind of risk. I'm more eager to just wait for the retracement of Bitcoin down to 6,000, and I might pick up some altcoins in that sense if Bitcoin does come to that level and make support, because that will signal that we're pretty much preparing for the next cycle. Okay. Going on to Bitcoin Cash, which again, this is Bitcoin Cash ABC, has been experiencing some really nice volume across most exchanges, has again started to go up in what would only be seen really, I think, if you were to look for any technical pattern here, as basically an ascending wedge, which to me, again, is another sign that I'm a little bit worried. Now, the reason why is because in an ascending wedge, you're setting up higher highs and you're setting up higher lows, and you basically have the lows increasing at a rate faster than the highs can be set. And that's showing that there's a squeeze of pressure in this case, right? You're not setting at a higher rate than what you are with your lows, meaning it's like you're hitting resistance quicker than you're getting buyers coming in this case. So people are eager to buy in on dips, but it's not setting new highs. And that makes it riskier for these buyers who are buying at higher levels, right? That's kind of the psychology around it. And not to mention, you've got decaying volume here, at least on GDAX, and I think the same case would be with most exchanges. So that's what we're keeping an eye on, guys. Again, altcoins right now, not really getting me too excited. We'll take a look at two more here. We're going to take a look at Litecoin and then XRP. Now, Litecoin has been killing in this market. It's been one of the best performing large cap altcoins. The question here is whether or not Litecoin can continue. One thing that a lot of people have not talked about is that this is a serious point of resistance, guys. 120 is going to be a little bit of a way down on Litecoin, not only because it's been one of the best performers in the market, but it was a major support range multiple times. To break past that and make it support again is going to be a very good challenge for Litecoin to take on over the next few days. As a trader, that's one thing I'm really concerned about. There's not much else outside of the fact that price has been going relatively exponential. It's been picking up pace with every low, and I honestly don't want to try to buy something that's started to move like that. I like to buy when there's the consolidation period or when we get a correction. Last but not least, let's go ahead and take a look at XRP. Now, XRP has been coming back up to its highs here that we saw back in mid-May. Again, exciting to see. I don't know if comparative to Bitcoin it will be able to continue higher, but this is usually what you want to see for continued breakouts. For example, over here, we had a cutback, a pullback in price, and then we set to new higher levels in the sense of relative highs, not all-time highs for XRP. That'd be $3. And then we actually made support on previous resistance. So it's nice to see. I just don't know yet, with the liquidity that we're hoping to see come in on XRP, whether or not this is going to have a breakout. If we get a close above 48 cents in this case, and maybe even 50 cents, and this thing starts to really move and we get the volume to back it up, I might trade this for a momentum play. Why not? Again, I'm not going to question the rationality of it. If it starts to move like that, I'll have a trailing stop and just let it go. So that's what I'm looking for at the moment in regards to altcoins. Alrighty, so jumping back in to taking a look at some news in the space. A few things I want to discuss in regards to fundamentals. So we're taking a look at a few different things here. Why is Bitcoin able to move the way it has? Why has crypto been an outperforming asset class? This is a very important question we have to talk about. Well, there's a few different things I want to discuss, and I think we're going to go through really a question of whether or not Bitcoin is providing real value in the network. In this case, are we getting more users on board? Are we transacting more volume? That's a very important factor. And really getting down to the root fundamental answer in this case that could be leading to markets performing the way they are. And I'll be fair, guys, I think it's become very clear, as we mentioned, when price moves sideways, that's the accumulation phase. Bigger investors have been stacking up over the last few weeks and months, okay? And we'll talk about that. We'll look through some of the data. So the first thing I want to talk about has to do with USD transaction value. So you're going to need in these market swings, and we haven't really seen it in full effect just yet. We know that NVT, one of the major indicators we watch on the channel, which measures the value transfer over the Bitcoin network by its market capitalization, it's a ratio, has been overextended for the price range right now. But we are nonetheless seeing a shift in the trend. And when the trend starts to form, it usually continues to follow through. So we saw here, for example, this is a logarithmic chart of the USD transaction volume. You can see back in the day, processing a few tens of millions of value over the network. And then you start to get towards billions up here during the peak of the bull run, and then a cool down back to the hundreds of millions on a daily basis throughout here in 2018 to 2019. And we started to curve back up, very similar to this kind of consolidation or accumulation period we had over here in 2018 and 2019. We start to curve back up. And in fact, what I noticed, again, you're never going to get things exactly precise, guys. You'll see some dips that kind of break through on the rule. But you can start to see that we actually made support, in a sense, ironically, on the level where we were seeing resistance multiple times here around, I think it's the $100 million range here. We started to make that as kind of daily support for transaction volume in the network. And then we started to really enter in towards an increase in growth. And if you were to take a look at this outside on linear scale rather than logarithmic, you can start to see, sorry, I'm getting a... Oh, actually, no, sorry, it's giving me linear. I meant to do actually, I want to get out of linear. Let me see. I guess it's not going to give me that. Okay. Well, anyways, in that case, this is good to see. You want to see that continued trend coming through, guys. And again, we want to actually see actual value transaction on the network, because as much as NVT can stay overextended, I've talked about this on the channel, it's not a be-all indicator in the short term, right? Like right when NVT gets overextended, it's just like RSI. RSI can remain overbought for a while. You don't want to see it last for a long time. It's really not going to last for a long time. We need to see actual transaction volume increase in the Bitcoin network. And hopefully you'll get that when people start to accumulate at the lower price ranges and you start to get people actually using Bitcoin for money transfers. I know a lot of businesses who actually use it for remittances and for international money wiring. So anyways, going on to kind of talking about this continued theory of accumulation. This is a really good article that came out from Cointelegraph over the last few hours summarizing how in the case of Grayscale has been accumulating in this market big time. Now, Grayscale was not only at they were at the recent conference for Consensus in New York. I went by their booth a few times. They've been really ramping up their marketing for the Grayscale Bitcoin. Basically, it's not an ETF like a lot of people have been looking forward to, but it's very similar to an ETF in the sense that they do have actual Bitcoin backing up this position that you can own. And this is one of the major products that they have, where they basically have one for Bitcoin. They're looking to expand as well into other altcoins over time. But basically a financial product that some people can purchase that will mask Bitcoin holdings. And it's been trading at an excessive premium. This goes to show that institutions want some exposure. And there is a limited amount that are out there because it's actually backed by real Bitcoin. So that's why you have this premium. And over 1.97 billion of the $2.1 billion of assets that they own that are digital currencies are Bitcoin. So it's really exciting to see. Now, Grayscale is not the only one here that has been doing this. In fact, this has been a major trend we've seen with institutions of varying degrees, from hedge funds, family funds, platforms, for example, like Fidelity, Robinhood, that actually will allow you to trade crypto, and they basically hold the custodianship through either themselves or a third party, have been picking up a lot of Bitcoin to provide this opportunity for their clients. And take a look here at the increase and decrease in different sized positions and addresses. So I'll go ahead and try to break down this chart. You have, for example, the increase in the number of accounts here. And you basically have accounts that range towards a certain amount of Bitcoin that they own. So you have accounts here, for example, that own between 0.01 to 0.1. You have ones, for example, that have a range, for example, from 0.1 to 1, 1 to 10, etc. It starts to get up, and then you start to get into 1 to 100, and then 100 to 1,000, and then the tens of thousands and hundreds of thousands. Well, these are what would be determined as retail size. So retail people are like you and I, kind of average everyday people. I don't think a lot of everyday people, obviously, as you can see the numbers here, really have 10 to 100 Bitcoin in this case, and it might start to get you towards a position if Bitcoin's value goes up high enough that wouldn't be considered retail count. But it's enough right now with the price of Bitcoin at around 8 to 9,000. You're still under $1 million if you own 100 Bitcoin. And then you start to get into the firm kind of sizes where you're managing other people's money. And then you get to the exchanges. And interestingly enough, money has been flowing out of exchange-sized accounts, the ones that have hundreds of thousands of Bitcoin, when you start to get into crazy levels. And a lot of it has been going into the 1,000 to 10,000 level of Bitcoin. Now, I want to go ahead and clarify a few things. I think this article maybe specifies this a little bit, but I'm going to drive home one point as a skeptic, that a lot of these firm accounts are probably not firm accounts. If you're not having this many firms across the world picking up Bitcoin, okay? That's a very clear thing we need to get clear right off the bat, okay? Now, what this is probably, I'd say a good half of this is really larger scale investors picking up. It might not be, for example, 400,000 people buying in, to 1,000 to 10,000 Bitcoin. That just wouldn't be the case. It can't be. I would say, though, however, that you're having a variety of large-scale investors buying up Bitcoin, splitting it up amongst multiple addresses to break the risk of having one private key exposed and losing all their funds, right? That's what exchanges do. And I think that's the other half of this as well. So I'd say that even if you're taking half of this increase of accounts that have 1 to 10,000, we are going through a very clear accumulation phase. People are picking up the lows, guys. Institutional investors know, whether they want to take a look at Bitcoin's previous price action or previous markets, that a 75 to 80% retracement on these new emerging markets is usually when you get in. And that's exactly what we had from the peak at 20,000 down to around the 3,000 mark. We've had an 80% plus retracement. And now, there's some serious buy pressure on the market, not to mention with all the macro factors we talked about, with the global trade war and things of that sort that we talked about. And this is something I wanted to incentivize as well, as we talked about with Grayscale and this kind of institutional accumulation. As we had more and more financial products and conduits for people to basically trade Bitcoin that's actually backed, I wrote to the SEC. Again, I don't expect them to really care about it. It's only about a 4-minute read, but I wrote this all the way back in July of last year about why a Bitcoin ETF would actually be decent in this case for breaking two of the things that the SEC was worried about, with manipulation, with the unequal distribution of cryptocurrencies. This would be a great incentive for a lot of whales to start to lay off some of their positions in this case, and it would be basketed into a financial product that'd be owned by a lot of people. So that's what I'd like to see. I recommend you guys check into it. If you just look up simply like Nicholas Merton Medium, you'll be able to find the article. It's the only one I wrote, but we got, I think, around like 5,000 claps on it or something, 5.6 thousand. So I was very happy to see that it went a little bit viral on Medium. But going on, let's go ahead and talk about what's going on in equity markets, guys. So major thing that I want to focus in on is this continued talks of the trade war and what we're seeing in price action. So yesterday, I wasn't focusing on a price action. We actually talked about the G20 summit and its relation to cryptocurrencies. The one thing that I wanted to mention is that we broke through the price range that I was hoping markets would hold on. Now, I wasn't so much hoping for it, is like if I was to be bullish on the market, it would have to hold in this price range. And that was, for example, right here at 7,600 on the on the NASDAQ. We broke through that. We're trading up a little bit today. We'll see what happens. I think we're going to hit resistance there over the next few hours. As well as on the S&P 500, we broke below the support range here at 2,800, and on the Dow Jones, which has triple topped over the last over the last 2 years here, we have now broken below this range that was holding support multiple times. We gapped down below it, which was around 25,200. So this is not good to see, guys. And the reason I say this is I think that we're having a combination of fear factors starting to reemerge. Trade war has been in talks for a while. Yeah, the Fed starting to get a little bit hawkish on monetary policy has been in talks for a while. These things have been lurking around, but with the media outlets starting to ramp them up again, not to mention the fact that I think the most core factor, I mean, we've obviously got fears of the trade war, and a lot of the speculative things that have come up, for example, like China using rare earth metals, the fact that it produces 80% of rare earth metals, to start cutting off exports for that to the global economy would be a decent weapon they could use. But I would think that there's much bigger things to be worried about. But nonetheless, that will carry markets lower. It will get markets fearful. The major thing here, guys, is central bank monetary policy. The inputs and output flow are changing. Central banks are no longer injecting capital into the economy. They're extracting it. Markets that would originally see money possibly flowing in to equities are now seeing that capital flowing to treasuries. It's starting to flow into a variety of these assets that were the toxic assets central banks had rolled off the market to give them room to grow. And that takes away money to the inflows of markets. There needs to be new sources of inflows. And we've used pretty much every weapon at our disposal to keep this thing up. Again, we talked about the pension rebalance here, basically, where we had $64 billion of fixed income investments, basically bonds, treasuries, things of that sort, switched over on a dime in a very short period of time into equities. And boy, did that lead towards a leap up in markets. And the Fed has been stagnating rates for a while. So they're either going to have to cut rates in order to keep this thing going, to make capital cheaper, and to provide a better risk to reward ratio for borrowing new capital and picking up equities, basically taking on corporate debt in this case. Or we're going to have to hope that, the continued effort of stock buybacks, which have, again, been one of the major tools that it's already priced in a sense from what we've seen, and we've been pushing sideways for the longest period of time. There needs to be more stock buybacks. Corporate profits need to increase. And right now, we're not really at a position when we're seeing peak corporate profits and peak stock buybacks and peak dividends. You don't have much room to grow. So that's my major point here, guys, just to kind of push that. Now, again, as I mentioned, indices are up a little bit today. In the sense of global markets, the VIX is dropping down here for the S&P 500. We're still seeing really a lot of the pain come through on a lot of the Asia markets. Again, might signal in this case that China and most Asian markets are getting hit just as hard on the China trade war than the United States or other markets are at the moment. But again, still growing a little bit worried here, seeing as we broke below this price range. What's the next target we can really look for in the short term? I'll be fair, guys. The first level that I look for is where we tested multiple times here. This is the Dow Jones, for example. We'll take a look at the other indices. I would think that you could see 23,600 as we've seen tested multiple times here. As we broke through this level, we kind of go into what I like to call no man's land. When you break that key level of support, that the market is obviously going to be keeping an eye on. Throughout this range here, throughout this rally, there's really no serious ranges of clear support. There was no period where we retraced and held there for a few days and then continued higher. This was one of those points. Outside of that, you were just going straight parabolic. There was no volatility. The market was doing great. Everything was in the benefit of equities, and you would have been silly to try to trade against it. Well, I think this is the next level we could look for. And if you start to break below some of these levels, the next one after that, as we can see here, rationally, would be down at this range that we saw. And if you break that level, you've not only already gone through a pretty decent retracement, you're going to start to see a serious retracement in a very short period of time. And that's where I could start to see equities having a serious pullback, entering into recession territory. Now, we'll do it with the S&P 500. What are the levels I'm watching for? Go ahead and show you. So we broke this level here. The next one I'd look for, if the S&P 500 is lucky, it might try for this range here, down around 2,700. But outside of that, you've possibly got one more level here that we have, for example, extending back to this range where we start to get buyers. And then after that, the next one is down here towards the 2,300 range. So those are some levels I'm watching on the S&P 500. And for the NASDAQ, which has been exponential in its gains and quite sharp in its losses. The next thing I would look for here for the NASDAQ is coming down to this range around 7,300. We saw, for example, support here, and support over here. Outside of that, again, I'd want to see it come down to this range, an area where we saw price pull back to multiple times back here during the beginning of 2018. And then after that, you've got down here. If you break past this, you're entering into no man's land. The FANG stocks will have their full 50% retracements from Apple to Amazon to Netflix to Google and Amazon, or no, I just said Amazon, crap. But all the major tech companies, I think, need to have a full 50% retracement. I mean, it's just very clear across the board, guys. I mean, you're setting up lower highs here for some of these major tech plays. I'll even turn off my drawings just to make it a little more clear here. I mean, it would be understandable to see these actually pull back. You know, for Amazon to pull back to 1,000, that'd literally bring it back to where it was in October of 2017. So crazy, right? You know, too far out to believe, right? Facebook setting higher lows as well. Again, for this to go down 50%, you just need to go to 110. We were close to it back here, right? And, you know, I mean, Facebook as a core company has been having to extend its business models because so many people are going away from Facebook. They have to continue acquisitions. Apple as well. For Apple to go for a 50% retracement, again, setting lower highs here. This is not good to see. This leads buyers to be much more fearful, and you can see the sell side is just as fast. For this to go down, you basically need $115 in this case for a 50% retracement. And again, not too far away from there, right? $150 is right down in this range. We might get a little bit more severe sell-off. I don't know, guys, but I'm just going to keep it conservative like that. Keep the idea of a 50% retracement in mind. It's not that difficult. So I'd love to know what you guys think down in the comments down below. What do you all think about equity markets at the moment? Do you think that they'll continue to slide off growing fears of the China trade war, central banks getting more hawkish and setting up higher standards for monetary policy? And also, do you believe institutions are accumulating on Bitcoin? And I definitely would love to hear what you guys think down below. I think it's good to share opinions on this and also define really what we mean by institutions. For what I mean is more of kind of the off-world kind of like hedge fund, family fund kind of space, because that's where I think a lot of the institutional plays actually have the freedom to really kind of move in right now. And then you're going to get the investment banks, a lot of the major, kind of brokerages on board providing services, and then some of the larger scale investors getting in and ramping up to the inevitable Bitcoin ETF, which should be coming out around the peak of this next cycle, just like Bitcoin futures did. Anyways, that's it for the video. I hope you all are having a fantastic day wherever you are, and I will see you all in the next one. Stay tuned.